Okay, now I see it. So, well, hey guys, it's finally nice to meet you guys. I know you guys been following my calls and looking at some of my results. Just so you know, all the calls that I'm giving you guys, it's not just that I'm trying to impress you guys with the things that the trades that I take. It's mainly to show you guys locations and the some of the coins that I'm looking at the same time. And that's gonna typically, in most cases, pinpoint some of the great coins that have a great potential for a reversal. This is why I'm posting them for you guys. Since I'm taking them trades, since I'm taking those trades, I'm only doing this because I believe they're gonna be safe for you to take those trades. But how you're gonna be taking them, guys, that's really, really up to you. Everyone knows easy algo, all the indicators, they should know more enough. If you're not comfortable with it yet, please don't take those trades, okay? Anyways, today, what I want to talk about is something that I haven't shared with anyone publicly. I know that you guys have been waiting and trying to get me on. But sorry, guys, my schedule is busy. I got so many different things ongoing besides trading. It's actually quite a lot and sometimes can be overwhelming. Just give me a sec. My son just came in and he wants something. One moment. Seba? I'm busy now, okay? Anyways, okay, I'm back. If at any point I might be cut off, just please let me know. Sounds good?
Yeah, sounds good, bro. Sounds good. We're all good. I think this is unlimited, so we're not gonna be cut off unless
Okay,
something
sounds good.
happen. If happen, we're gonna let you know as well. So we good.
Okay, sounds good. So, uh, it's fantastic what Easy Algo since the beginning came up with. There's been a lot of fantastic improvements, in my opinion. A lot of it also has to do with the EAX, which I quite a lot depend on from a perspective of Orion terminal, which you guys see right now. Can you see it? Can you
Yes,
see
we
the
can see it.
website? Yes.
Yeah, we can
Okay.
see that. Yeah, the orange terminal.
So
Yeah.
my ways of approaching every single morning. Okay, every single morning around 6 o'clock till 6:15. I do a quick analysis on the coins that are really attractive in a way that they're quite volatile. And the first thing that I always do is I either go on the Orion terminal where I just simply can click on the volatility, 15 minutes, and it will give me the top most volatile coins. Those are quite extreme volatilities. Anything that you will go above 1% and higher, those are really extreme. I don't mind looking at these coins because I love that. That tells me that the coin has a lot of volume and it's either going up to a really crazy oversold, overbought location where there's a lot of liquidity sitting, or vice versa when when it dumps. Okay. It's simply what it's doing, collecting a massive amount of liquidity. And that's fantastic because that's when yeah, quick profits can happen. Anything below these levels, I would suggest for you to maybe start with if you're not so comfortable with volatility. But at least you know that these coins are active enough for you to understand that they're not ranging. They could be. But understanding price action is something for you guys to also dig, a lot deeper. I would highly, highly suggest that for you guys to understand price action really well. How you can use that to your advantage in any kind of a market, bearish or bullish. Okay. If it's a downtrend, if it's an uptrend, it's critical for you to understand as much as you can about price action because it's all about location. No matter what you're gonna be looking at, you always want to come in from some kind of a trade that is coming to some specific key level or is already at that key level. Anything in some type of ranges, okay, to me, that's just simply waste of time. Okay, continuations, and many times they do nothing else but will wake you out. They continue on coming back to some specific locations for more liquidity before it will actually take off, right? So I'm mainly looking at the top, let's say, five, six, seven coins that are the most volatile, because that simply tells me and sums up my highest probabilities of something that's already active. It's moving. When something is really moving, I can also take this quickly for a continuation. When I'm going to recognize quickly if I look at any of these, okay, for example, truth, and that's a coin that I actually right now, a couple minutes ago, okay, I took a trade on it. Okay, I took a trade on it right now. I thought that's a fantastic coin, okay, and I just simply grabbed it. But before I'm gonna explain to you what I'm doing and what indicators I'm using, I want to show you guys something that is actually nice that it happened today. Jelly, jelly. Okay, I posted for you guys. Okay, let me get rid of this. I really don't need to see this. One sec. You guys, can you still see my screen? Yes, you can, right?
Yes, brother, we can see. Yeah,
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 let me just
yeah.
hide this. Let me just hide this. So many things. How can I hide this icon? Oh, right there. Okay, right there. Sorry,
So if
guys, I'm
you
not that.
double click it and then move it all the way to the
Yeah,
right somewhere,
yeah.
then
That's
you
what I
will
just
not.
did. That's
Good,
what I
good,
just
good,
did.
good
Sounds
stuff. Good
good.
stuff.
Uh, okay. So I posted you guys three coins, okay, just so that we can actually quickly talk about this and how I analyze my coins, okay. Addition to what Easy Algo is offering, most of my indicators that I use, it's mainly indicators like the TDIX, TrendX, and Indicator X. Those are my three favorite. Why I use them is because they're really simple to find coins quite overbought or oversold with liquidity levels at the same time. Liquidity levels, it's something major that I'm mainly interested, okay, on higher time frames, like daily, 4 hour, okay, 2 and 1 hour. Those are the locations where I would be looking for specific patterns, okay, where a lot of liquidity could be already sitting, or it's trying to reach that level to grab that liquidity. Those are my locations of interest where I would just simply on higher time frames set up alerts. Knowing that I am on a much higher time frame, I would always break down to that location where the liquidity might be. For example, if I was to show it closely at this level, right? I just simply mark them, okay, as they come, as simple as it can be, okay, and I will put a alert on it. First, I would name it. I got multiple. I believe that you guys know how to set these up, okay, to apply whichever condition you might be looking at and whatever that might be, okay. This could be a liquidity, that could be any of those things, and I just simply would set alerts on it. And when a time might come, whenever that might be, I honestly don't care. If that level comes, I know about it. And most of my trades, they simply come to me. They come to me. I will analyze some of these trades typically on Sundays, okay, when weekly pivots show up. And from there, I would just break down to the most, let's say 5 coins that have a big potential of a movement. And I will confirm that with the volatility or potential at the level where it's mostly oversold or overbought. Okay. This is my main focus. I don't need to see anything in between. If some kind of a coin already took off, let it do its own thing. Okay. I'm not interested in chasing. Yes, if it's something hot, everyone is talking about it. This is fantastic. You want to go for it? Try it for continuation. But for reversals, okay, sometimes they can be tricky. Why? Because if you have, for example, jelly that already made a huge pump like this, there's been so much interest, so much volume, okay, it's been completely exhausted. Now it needs to come down almost all the way, believe it or not, to some major levels because it's not gonna have enough juice to actually make a reversal. Okay, it will just simply be your waste of time to look for something that's moving somewhere in between. Think about for any coin that you might be looking at. Okay, think about always a higher time frame, major liquidity pools. That's where you want to be. That's where you want to start your trades from. Okay. There's no point of looking for something that you could be hoping that it might start to move. Don't think about trades like that. You'll be just wasting your time, constantly being frustrated and wondering why I'm constantly being stopped out. Because as these moves happen on a higher time frame, okay, it's nice and simple, and you think it looks great. You know exactly what it's doing. But during reversals, okay, that's where you have a lot of volatility, and you know that the coin is prepping for a reversal. Sometimes you want to be delayed on these type of movements when you actually have a really high volatility coin. Because what happens at these ranges where you have reversals, market makers are collecting liquidity. They'll be playing you for a fool. When you have some time as this happens, it can happen either at the top or at the bottom. What always happens is that every pump, okay, has its own break where it will where it will stop. And same thing goes for dumps. And then it needs to consolidate for some time. And you have enough time to actually still find the most ideal place for that reversal to come. Like, for example, jelly. Okay, I gave you guys a call, okay, on that where I took a trade. I knew that this was gonna happen and I waited. I was expecting a first pump to happen nice and big. That's when retail is coming, and they think that that the coin is reversing and it's gonna be fantastic, and things are gonna go back to how the chart looked like on higher time frames. That never happens. When you have huge pumps and dumps, keep in mind at those peaks and bottoms, that coin needs to consolidate. Okay, if there's a lot of action around it, okay, then that consolidation will happen quicker. If it's already exhausted, okay, some news about some coin is done, this will consolidate and consolidate and consolidate for days, if not weeks. You will see that more often, okay, on many coins if you're gonna be focused only on those two levels. And I'm talking about daily, 4 hour, okay, highest and lowest peaks. You see, when I started to trade, okay, I was always all over these coins, everywhere looking at, okay, what would be my best location to enter somewhere here in the middle. Maybe I'll come somewhere here, okay, as it comes down, okay. Then I quickly realized that this is just my waste of time. So what I decided to focus on is on the highest time frames, okay, and mainly look for liquidity pools. And and you have one, okay, and you have one here down below, okay? That's where I would just simply mark some of my levels. That's my focus, okay? And I just simply break everything down from major liquidity levels, looking at indicator X, trend X, if I have supports, okay, pivot supports or resistance. I used all these indicators, mainly indicator X and trend X for locations. Every entry that you want to take on any kind of a coin. Don't think about if it's some Elon Musk coin and you have some big hopes and dreams that this thing is gonna be taking off. Who knows to where? Okay, with crypto it doesn't work like that. Okay, there are quick pumps and dumps. In my opinion, in my experience, the best way is to only focus at the peaks and bottoms for any kind of a coin. There are some natural ways of how they move, and they always move in the similar ways. Okay, how much volume will be coming into that coin? That's another topic on its own that makes these pumps look so fantastic. Okay, especially when it comes to pumps. And a lot of them, okay, especially in the last I don't know, let's say 2 months, 3 months. These pumps, they just simply don't make any sense, at least to me. And I'm not going to be trying to find logic or reason behind them, why this is pumping and why so much money is coming into that specific coin that has no good use at all. It's completely useless coin, okay? But it's not about that. I don't care. I don't look into these coins at all. I don't care about them whatsoever. I'm only mainly every single day interested at the most overbought and oversold coins. Second way of okay how I look at the most volatile. Okay, I got my account closed just in case. Whichever um what do you call it, platform you're using,
Exchange, yeah.
okay, exchange, Blowfin, Binance, whichever. Okay, those the exchanges, the ones that you use, will always give you the most precise overbought and oversold coin, okay, on that exchange. Sometimes it's not about volatility, like I just explained to you guys. Sometimes, okay, it's a slow moving coin, okay, it's bullish, but it's slowly moving and moving. And these moves, they sometimes happen for days, but it's a consistent move. And eventually it comes to those levels where just up at some peaks, you will have some spikes, and then boom, your exchange shows you a higher percentage. So you want to look for that. And by by having okay a good understanding of price action, once again, you can tell how oversold really quickly. Analyze this to a really good potential trade that you can take for a short. Okay. Understanding price action makes your analysis almost flawless. Like you at least right away in the first 5 seconds, okay, of looking at some coin without any guessing, you can tell that that it's a crazy pump and it's a great potential to look for trades at that peak when it starts to when exhaustion starts to come in, and you start to see the exhaustions a lot of times based on the candle movements. If you have spikes to the bottom, to the top, bottom to the top, that's just a constant fight between bulls and bears. Okay, understanding some candles helps you a lot as well to make the right decisions where the possible end of that trend will happen, because they will simply tell you they will simply tell you the volume. If you look at from that kind of a perspective, every candle that has its own power, has its own the volume that's backing up that move. Okay, the bigger, okay, the candle, the bigger the wick, the more wicks you see, that means simply, okay, market makers, bots are crazy involved in this and they're playing retail for full. Sometimes you want to stay away from them, okay, because they could be risky, right? They could be risky. So understanding a little bit of something will always give you the best outcome, because it needs to be clear for you, okay, what you're looking at before you will actually be taking those trades. Okay. Don't look for some, some kind of a coin. Let's try what's gonna happen if I'm gonna take this from here or from there. Always, you need to be at some specific key level to even start thinking about it. And major key levels is what you should always be focused on. That's what I'm doing. Okay. As that happens, okay, I could see two, three, four, five coins that could be potentially doing the same thing. Out of those four, five, pick one for a day or two, no more, and that's your focus. That's it. Okay. Don't be scared that or be disappointed that, oh my God, I picked the wrong coin. That third and fourth coin actually did what I was anticipating. It's not about that. Okay, your job is to actually focus on that coin. If you made some mistake with that coin, okay, believe it or not, next day, third day, a week from now, you will start seeing a similar patterns where the coin that you were disappointed with, another one showed up with similar movements, and you will already see, okay, and start picking up on things, how these coins tend to move in similar patterns, volatility shifts, so on and so forth. It's quite common. And if you're gonna focus on volatility, you start to understand volatility. If you try to focus on continuation, many times you can get yourself confused because
Get out of my
coin
face.
because what's that?
Sorry. Sorry,
Can we
nothing.
ask you guys to mute and ask your question
Yeah.
towards the end?
When you look for continuations, okay, coin needs liquidity. Coin needs a coin. Some coin needs money to continue on doing this. So we'll be chopping you up and down, and then you just wonder why I'm getting stopped out so often. You want to be at key levels to minimize, okay, those stop losses. And that's the beauty of the coins that are really crazy oversold or overbought. And then any kind of scalp, okay, you can hold as a swing and keep it for day two, three, or however you want to take this on. Okay. If you just focus on that, many things will change for you. If you're going to be all over trying things in different ways, that's fine. Everything, okay, the different strategies will work in different ways for everybody else. You just have to understand and pay close attention to what you are comfortable with. So, to break things down, because I know that you guys really want to know how I'm capable of making such a precise entries. I'll get to that a little bit later. But many of my trades that I take, because I'm always on the go and doing so many things, okay, I kind of train myself to take my trades on my phone, on my cell phone. So, because it's a cell phone, it's not that easy to analyze charts, right? But I spend 15 minutes a day to find a coin that I'm just simply trading for the rest of the day, or two coins, depending what I'm looking at. So I would always struggle with that for some time. And in the last year or so, I decided to devote myself to start using nothing else but moving averages. Because moving averages, it's easy to see, it's easy to understand. Okay. And what's so special about moving averages, exponential, simple, whichever you want to be using. Okay. What's so great about them, okay, that they have one thing in common, okay? That's that's their nature, okay, that can respect a support and resistance. Now, when you combine multiple levels of exponential moving averages or simple moving averages, as they move, expand, how they contract, creates, okay, a specific point that you can focus on where you can find a really critical movements, either to the upside or to the downside, for a short, for a long, okay? So I've been experimenting with different levels for different time frames, and eventually I build up something that I can really trust and be confident with on seconds time frames. This is how low, guys, I go. Okay. For most, it's next to impossible. For many years, it would always be a challenge for me, but I always wanted to understand and know where I can precisely take, okay, trades at not only at the really key level, but understand the entries, because there's almost no indicator out there that you can, in my opinion, create that will be so precise with specific locations, okay? But moving averages can actually show you that, okay? And that's what I created over time. Now, to give you a good understanding, because I know that some of you, most of us, I guess, in here at Easy Algo, we trade crypto. But what I'm about to show you is something that you can actually put into any kind of a market, okay? That you can actually quickly, efficiently, okay, find a coin that you can analyze in minutes to know exactly what to expect from that coin on a short term and long. So if you choose to be an investor, if you want to be a swing trader, okay, scalper, whatever, okay, I can show you that, okay, with a simple EMA indicators. I haven't been such a big fan of multiple in EMAs, years ago. Most of us always talk about 200 EMA, above, below, blah, 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 all these things. When you're actually gonna build up multiple indicators into specific strategy at specific time levels, which is meant for, that's when you actually start to realize how easy it is to recognize what that coin is doing. Okay. So to start, I'll talk about some of the indicators that I use, okay, for you guys, addition to what Easy Algo has, even though I love them, but I'm adding on different indicators just to have a clear visual perspective on how I'm actually reading these movements, especially on lower time frames. And moving averages, I quickly realized that they are actually the best. So anyways, for a long term, if you want to be an investor, okay, I've been playing, listening to a lot of people, different traders, trying to source things out and build something that anyone can understand and anyone can quickly analyze. Okay. And those are typical levels of EMAs. For example, if you want to be an investor, if I choose to invest in something big, okay, some kind of a, let's say, stock, okay, 25, 75, 140, 200 level EMAs can give me on a daily, okay, 3 days consistency, especially on the dailies when the beginning of some massive dump on some stock that you thought could be dead, you had some hopes, but never ever anything happened for weeks, months. How can you know when this thing could be moving again? If you look into daily with 25, 75, 140, 200, okay, EMA, you have a precise location, okay, where on the high time frame you can tell that this is the beginning for some coin for you to invest in, and you can forget about this. Okay, anything below these levels, you know that it's a long continuation for a downtrend. The minute things get above 200, and how much they spread between each other. The more they expand from one another, the more you know that this is a bullish coin, okay, and this thing is pumping, it's moving. And this is, keep in mind, on daily, okay? That's one approach to how I use different kind of markets, okay? Now, breaking things down to lower time frames, okay, I played with the 50, 110, 250. That's also really major on higher time frames, okay? 250 is also fantastic for something like that. If you want to really find some penny stocks, whatever that might be, the 250 will also give you a really nice understanding of what the coin might be doing in the future. And I'm talking about weeks, months, who knows for how long, right? But as I come down to lower time frames, okay, I typically, okay, stick with 5, 34, 100, and 120. Why? Because these levels are well respected on lower time frames. Okay. Look how well many of these locations I'm able to simply pinpoint precise pumps. Okay. Look, and I have enough time to actually find a similar, okay, movements in these exponential moving averages. Look how tight they are, right? These are levels, okay? The five EMA, 3400 and 200 EMA on a 5-minute chart. You can even change this to 15, okay? That gives me more than enough time, okay, to actually pick a coin that it's already prepping for that move. It may not be ready for that move, but it gave me enough sign, okay, to tell me, because the EMAs are so narrow, so tight to one another, just like daily pivots, weekly pivots, okay? That tells me that this location, okay, it's a consolidation, okay? It's time, okay, market makers, okay, are prepping for a move. They're buying slowly, buying slowly. Sometimes people use different indicators that it shows you that specific level, it shows you this, it shows you that, okay? And they calculate these things in ways that, honest to God, I don't understand how they work. I don't care. So to simplify all these things, seeing many different indicators, trying to depend on them, okay, that's also not a good thing. You always want to be flexible with indicators that you're also using. Using indicators at different in different markets at volatile times or not so much volatile times. Okay, every indicator will react in different way. That's one thing that a lot of people miss. They really don't understand that the indicator is not gonna function so well. And for example, on some volatile coin that is, above 1%, it will work below that, okay? Below all these levels, it will function properly. Most are delayed, and that's their nature. They're not capable of handle high volatility. Okay, you got to keep that in mind at all times. This is why moving averages, just the minute you put them on, you can quickly see what's happening with it. Just by this is jelly, okay? Look what happened here. I've been looking at that coin, for example, for some time. No one was really talking about it. I mean, I haven't really heard. I mean, I don't know anything, to be honest, about that coin. But the minute these type of things, sharp dumps happen, you know that this is the beginning of a downtrend. Now, how can you be so sure? Okay. Typically, when some kind of a support, okay, that trend line support breaks, that's your first signal of weakness. It doesn't mean that it will dump all the way down. Okay, you just have to be patient most of the time for a retracement to happen. And what I do, I use a lot of Fibonacci retracements, the levels that I give you guys. Okay, the minute I see any type of trend, okay, trend line break on any type of coin that I was analyzing in the past that I had, let's say, alert on it, it comes to me, I know exactly what to expect. Then I'm simply prepping myself where that movement can happen in a day or two, or just 1 hour or 2 hours for something to retrace to specific levels, and you will find them with your fibs. Okay? And they are being respected so much, it's ridiculous. Okay? This is like, gold on its own. Many traders talk about these levels, some don't. I mean, I used to for many years at the beginning, I only knew the 382 and 618. And then one day I found out about 786 and 886. These two levels are so respected in all markets. It's not funny. I mean, almost all of my reversals, I grab off of these two levels, 886, 786. And look what happened, and look what happened after. Okay. How far this thing dumped. Okay. So much money came into this for no good reason. Then obviously everybody will be dumping because this is a shit coin, in my opinion. It has no purpose, okay, of any sort. Maybe it does. Maybe you know something about it. To me, that coin means nothing. Every chart, every coin I'm analyzing, I don't have any bias towards it. I don't connect myself with it. I don't think of investing in it because it's crypto. Okay, many coins will die, and one day you will never see that coin again. That's just the reality. So what's the point? You want to be trading them daily. Okay, that's your only perspective that you should have, in my personal opinion, at crypto. Okay, so how can you tell, continuing forward, how can you tell when this could be reversing? Okay, on higher time frames, you might be on 1 hour, okay, 2 hours. You can see similar movements. Okay, depending on which time frame, it's critical for you to understand, okay, that different time frames will respect different moving averages. You have to always keep that in mind and understand the differences between different time frames. Okay, 1 hour, 15, 5, 1 minute. Okay, and you will start to see a consistent, almost like a copy and paste between different coins, that they will be respecting these levels, these moving averages on 15 minutes, 5 minutes, 1 hour, almost all the time. And you see, and when you see that specific time frame that you've seen many times, this happened, you can be confident that this will happen again. It's a different coin. This coin means nothing, but it is respecting what it's supposed to be doing. Okay, these moving averages, they will be respected as a support eventually over time. The narrower they get, you know that that movement is gonna be coming soon to you. Okay, and you can find these everywhere. I'm just giving you this to you guys as an example, and understanding that where that coin came from, that's how you can be confident that you can keep that coin for much longer. You don't have to sell it. Let the market do its own thing. You have to trust what the market wants to do. That's another thing. And moving averages, okay, show you that. Okay, many times we get emotional and oh my God, this is I'm gonna lose that 30%, 40, 50, 100. I cannot go beyond 100%. How is Crypto Chris doing that? This is it. I changed my perspective completely, okay, until I started using more moving averages so that I can have a good understanding and quick analysis to what is about to happen. For me, when I take that trade, it's either I'm gonna be scalping it or I can swing trade this and just even let it go, or at least confidently knowing that this could be a swing trade, I can use this for scalping, and I just continue on going long and long and long. Every trade I will take for a long, I'm coming in with the profit that I got off of that first trade going long. So just imagine how quickly small amounts can accumulate if you're gonna be taking those trades with such a confidence. You don't have to ask anyone about this if your bias is correct or not. Okay. Now, how do I also look for the key levels? Okay. Talking about more indicators, but for the time being, I'm not going to talk about that much about the TDIX. From time to time, I'll be jumping into it as well. But at the moment, I'm just want to give you as much as information as I can about locations, how I can quickly simplify these things, especially when I want to look for overbought or oversold locations. I know that for many people, indicator X that's a really powerful indicator. It can be used in so many different ways, set He's the expert on this thing. I'm not so much. Maybe I'm not, but I'm simply using this in most cases for liquidity levels, and I'm always interested in either major, okay, value lines, okay, or origins. Now, to simplify this, okay, if I don't want to be looking at so much because indicator X is really busy, for some time I was looking for something simpler that can be similar to what indicator X does, okay, but in a simpler way. I found an indicator called Trading Toolkit by Big Beluga. I know that some of you might know these indicators. If you don't use them, well, maybe you should, because it's a really simple indicator that also shows you divergences. Just since we are recording this, I'm sure later on you guys might be asking me for settings and so on and so forth. So I'll show you that, okay? It's a simple indicator. The only thing that you have to click on is go on regular bullish, and bearish, these four. Okay, you click them on, and that's it. As basic as it gets when you're gonna upload this indicator. And look how, okay, fantastic this indicator can be to recognize only major levels of liquidity and supports. And it's a nice, clean, okay, visual at what you could be looking at. When you start breaking that, when you start seeing, okay, bearish divergences on such a high levels, on such a high time frames, you know there's gonna be a major move coming, okay? It's easy, it's quick, and it's clean, and that's what I love about any kind of indicator. Okay, I don't care what anybody might be saying about some special indicators that they love to use and what it does and blah blah blah. To me, it makes no difference. I need to have that indicator to be as simple as it can be and clean for me to look at. That's it. And when I see these levels, I can quickly, on higher time frames, analyze this to a potential trade. This, for example, could have been also a double bottom. It could have bounced. But that's not going to happen when you actually have some crazy coins pumping. I always used to call these pumps house of cards. Okay, whatever pumps will dump, it needs to collapse. It's that simple. So knowing all these things where coins are coming from, it's critical to your success. It it's critical. Okay, you need to always keep that in mind. This is why higher time frames, every trader will tell you that this is where you should be starting to look at any kind of a trade. And you don't want to be interested in anything that could be here. Okay, for what? You want these levels. You want to know the bottom, that location that everybody already gave up on that coin. There is no future in this coin. Blah 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 blah. All kinds of bullshit on the internet people are talking about. You want to know the top and the bottom for every single coin that you want to be going after. That's my perspective on it. So this is a really nice and clean indicator. Another thing that I quickly, because I understand these indicators really well, I spend a lot of time. Well, listen, some indicators are so simple, it's easy to understand them really quickly. If you understand them you know what it's doing for you, and you see exactly what you are looking for, stick to those indicators. Having too many indicators, okay, can be really tricky, and it will continue on keeping you frustrated. Okay, if you're not comfortable with indicator X, use different indicators. That's my advice. Okay. Now, the only way of knowing, okay, how comfortable you can be with that indicator you need to spend some time with that. Trust me, you're not gonna have any success with some indicator that you looked at that looked beautiful, okay, for you for the first day. It doesn't work like that, okay? You should always back test any kind of an indicator and spend, I always say, enough time, at least a good week. This to you may sound a lot, but if it's a complex indicator, okay, spending a couple minutes or a couple hours with it, okay, it's not gonna do you any good. You're just wasting your time, and you just simply flip between the indicators. Keep it simple. In TDIX, that's a powerhouse. That's a fantastic indicator. I would highly advise for you guys, okay, to spend as much as time with it as you can and understand the nature of it between different time frames. It's critical. It's critical. Okay, TDIX will show you slightly different movements, okay, on higher time frames than you will actually see them on lower time frames. Okay. May, how can I put this? What you do, as everybody will tell you, what happens on the higher time frames will be reflected on lower time frames. Okay, so lower time frames, okay, is where I spend most of my time, and I created a lot of different strategies, okay, for it and last money, win a lot, so on and so forth, and continue on always finding what works best. Okay, especially on lower time frames. Okay, and sniper entries was always something that I was, just honestly got obsessed. How can I find always that the most ideal location where I should be entering? Okay. So to give you guys a good perspective and understanding of jelly of what I just did with this indicator, so that with this coin, just so that you guys also have a good understanding, okay, how I approach every coin. What happened here? What just happened with the TDIX? Uh, Something just, oh, sorry, right there. Okay. I took this trade. I was looking for it. I took a short on that for some time from up at the top. I was not expecting that it's gonna dump, okay, that hard. So I sold the thing much sooner than I was and actually expecting. But it is what it is. So for this coin, okay, what I do when I come to the tops and bottoms, oversold, overbought locations, okay, I created, in my opinion, the most ideal, okay, lower time frame approach to every entry that you can actually imagine, and that's simple moving averages. Simple moving averages. Let me get rid of this. And those are 8, 20, 100, and 200. Okay, this is an indicator. This indicator, okay, it's called simple moving averages by Stocks in Box. What's so different about this indicator, okay, it gives you the simple moving averages. You can find multiple different indicators out there that show you, moving averages, ribbons, so on and so forth. There's a lot. You can pick whatever you want. What's so nice about this indicator, and I believe Futures is using that as well. For any bullish and bearish move, okay, it changes its color when candles will pass through it. Okay, so I started backtesting this for a while and playing with crossovers, how they will react for me on lower time frames in volatile conditions. Many indicators will lag. right? So you could make a lot of mistakes by working with indicators like that. What's so different about simple moving averages on high volatility coins with really low time frames like seconds? That's when they really start to perform and make it look like it's a breeze to take these entries. Okay. So just so you know what the simple moving averages that I'm using, 8, 20, 100, and 200. And what I just simply did to them, just so you also see it, okay? The 8, 20, and 100, okay, as the candles go above these averages, they will turn green. As they go below, they will turn red. And what makes these only 3 moving averages so special is that how they react between each other, how condensed they can be, how they will expand from each other. That's the secret. That's what you looking at on lower time frames. And the 200 EMA is the blue and yellow. I changed this only so that I know exactly, okay, which I changed the 200 SMA to a different color so that I will always know if I'm above or below some crazy bullish or bearish condition. Okay, you get into seconds now. This is 1 minute. You get into seconds, okay? 15 seconds, 10 seconds, 5 seconds. When you will be coming at some specific level, okay? At some very specific level, which could be your liquidity level. I'm just giving you this as an example. It could be a pivot, which you have close by here. That's a daily, narrow, okay? When you have these, okay, 4 indicators combined together, you will know precisely, okay, like a knife that cuts through where you should enter precisely when they start to cross over. The minute, and that depends on how quickly you also want to enter that, you will know exactly when you will have a bullish or bearish momentum in that time frame. You see, we don't see a lot of movements on 1, 3, or 5 minutes. This is where everybody is always, those are the levels that everybody is always talking about, because those are the only ones everyone knows. That, you know, anything below 5 minutes, that's insane. Anything below 1 minute, oh my gosh, what is he doing? Yes. Why? Because you don't see what's happening. There is no freaking way of knowing and seeing how that coin is reacting with anything on the properly below the 1 minute. So I would always continue to try to solve my problem. Okay, how can I figure this out? How can I clearly see if that coin is still in that bullish or bearish momentum at its peak or bottom? That's how I get them. That's how I recognize them, okay? When it's time or not, and how I see it, how I approach it. The more they expand from each other, especially the 8, 20, and 100, going above the 200, which is blue, I know it's bullish because I'm looking at 15, 10 seconds on or 1. What's so beautiful about these, okay, simple averages, the higher the time frame, okay, you will try to look how confidently you can be, okay? I'm only on 1 minute. I'm only on 1 minute that I know that this is already a reversal in the making. Okay, for my entries, it's all about from 15 seconds to 5 seconds. Okay, this is how insane this really is. And because I'm on 5 seconds, okay, I know, okay, that I don't need to rush into this coin at all. This is 5 seconds. These are quick moves. They're moving 5 seconds every candle because this is jelly. It's a low cap, so the candles are quite choppy. If you're gonna look at the bigger coins, okay, then you know the candles are much easier to look at. Okay, but because I'm on such a low time frames, I can comfortably, okay, without any hustle and hesitation, see that this coin is still bullish, right? So if you find some key levels where you have with Trendex, okay, pivots, those are the only locations that you should focus on for some type of a movement. For some type of a movement. So let me give you an example, okay, on the first entry that I did. And what jelly did to me, I became liquidity, believe it or not. And this thing just started to move. I wanted to give you guys a good example of what I do. So I did these 3 trades specifically just to give you a good example on it. Let me go back to a location where I took my first trade because I'm on such a low time frames. Okay, the chart just gets choppy. Okay. You can also go back and analyze this, look at the entry because I marked this for you guys so that you can also see it in with what I posted. This was a bit of a delay, but that's okay. But I'll show you how I found this entry on such a low level. Okay, hold on. I gotta always I gotta change my settings for trading view, okay? So that I'm not gonna be losing these. Look, on 15 seconds, okay, on 50 seconds, I was waiting for that support. If I was to actually put this on a higher time frame, this is a support level trend line, a simple trend line that I was expecting for some kind of a retracement. Okay, it just happened that I was outside walking my dogs. I came out and I was came back. I was a little bit late. It wasn't that much at all, but I always try to look for the most ideal location. So I knew that it was a time to reverse and to make it really safe. 15 seconds. Okay, if you have a really choppy volatile coin, 15 seconds you can confidently use for a confirmation for a reversal. When on 15 seconds, okay, the candles start moving above 200 SMA. And I simply, the minute I noticed that, okay, when the SMAs slowly already broke and started moving higher, that's critical, okay, for making your analysis also to see how the moving averages look like. The minute you see on lower time frame these type of movements where it's a consistent downfall, the minute you see a break like this, just to zoom in, a break like that to the top, okay, you know that there is money starting to flow in and there is interest. Believe it or not, I see this everywhere all the time.
Sorry, bro. Can I just Got you there. As you were explaining, I was looking for some of these SMA. I found most of them on the indicator, but that SMA I couldn't find who's
The
the
SMA, okay, that's the simple moving averages by stack sin box.
spots in box.
Stacks, yeah, stacks in box. So if I was to take this now to a 5 seconds, you will see precisely in this location my crossover. Okay, that's where I made my entry to such a precision. And depending on how what kind of a coin it might be, a low cap. Guys, these type of movements, okay, you're talking about percentages that are just mind blowing. Like just imagine from this level, okay, it depends on what leverage you guys gonna take. Okay, this is, look, that little movement, okay, five seconds movement, okay, give you 2%. 2% in 7 minutes. Okay, 6 minutes. So if you take this on the 10, or let's say 20x, that's 20% right there. And you can be done for a day if that's all you really want. Look, you take this farther,
Hi,
okay?
can I ask a question
Yeah,
as well? Like,
go
so
on.
you see the 200, right? SMA, you see it close a couple times, and basically when it kind of turns into the support, then you go in and you do your long.
That's right. That's right.
Okay. So it flips
But
it, you see it
it
coming above, it flips it
that's
to
right.
support, and
That's
then
right.
there's your entry. Okay.
And the minute my candles start moving above the 8 and 20, specifically 8 and 20, when they turn green, okay, that could be your entry. But it needs to be for you a confirmed reversal. The minute it turns bullish, the minute yes.
Can you actually zoom in more on your chart to that specific candle where you had your entry? Is it have no wick on the bottom? Or there's a little wick, okay.
Like this is on a 15 seconds. This is 15 seconds, okay? But if I was to break this down to 5, I just don't want to lose this location. You will have a really similar, okay, moving averages, a similar setup, how it's looking on 15 seconds. And I simply made that entry in this location with obviously more candles, but it happened so precisely here. If you believe that you're not really comfortable with these type of movements, then you stick to higher time frames, right? Now, volatility, it's also critical. Sometimes you want to avoid the ones that are really at this peak levels and they're crazy volatile. And this thing, it's either, continues on pumping and the candles are moving crazy. Stay away. Wait until that coin is gonna come down, and then use Fibonacci levels for precise locations where 789 and 889 most of the time gets respected, because you want to keep that always in mind at the key level. You don't want to be chopped around somewhere in the middle. So when you're gonna find that precise liquidity level, okay, that's where you want to be with these type of setups on anything from 5 to 5 seconds, whatever. That's what I do. That's my call it crazy approach. Okay.
Well, the thing is,
That's how I see it. Now, if you look at higher time frames, how I can also quickly here, it's also a good one to see and recognize what's happening on higher time frames. Okay. The minute I see on 5, 3, or 1 okay, the first 8 SMA turning green, that means that bullish momentum is coming back. Time frames are critical to your analysis to understand these SMAs. It's critical, or it's not gonna work. So if you spend enough time to recognize these type of movements, okay, you will see how often these type of reversals happen and respect these SMAs. Okay, but understanding and looking at multiple time frames, okay, at the same time when a big momentum, the whole action is happening, that's what you want to break it down to, from a 5 minute all the way to seconds. If you don't have, let's say, the premium, if you don't have the trading view, the premium, right? Then use on 1 minute. It's just as powerful. That simple move over here, as you can see, this is 1 minute. Okay, that could have been your 5-6% pump. Okay, and you could be done with it. You don't need more. And what also helps you seeing these moves at the same time is your TDIX, where you want to take that profit. You got to know as much as you can about TDIX to also understand when it tells you to take profits or when to enter a trade. And those are the crossovers, the small, the slow and fast, okay, moving averages where they cross. The minute they enter the Bollinger Bands, that's when you can just simply pull a trigger and take your profits completely or just some, if you choose to, if you want to scalp at these type of levels. And it's a consistent, okay, approach that you can continue on seeing everywhere on almost any coin that you can think of. Now,
And
when
guys,
you
from here now,
combine these,
I'm gonna allow the guy to finish first before he will give us opportunity to ask questions. So the recording, so he will go as he want. I'm sorry, I broke the rule. So, but I'll let him finish first. Let him go through what he wants to show us, and then he may answer our question before we even ask for it. And then towards the end, if it's not answered, we can ask him. If that
someone is
sounds good for
asking some questions, right?
Yeah, they want to ask, but I thought you best finish off
Yeah,
because there's a question sometimes answered as you go. Then, oh, I don't have to ask that because you already talk about it.
I get
So
it.
when
I
you
get it.
finish, then we will have time to ask you if
Of
that's
course,
okay.
of course, of
Yeah,
course.
cool.
Okay. So now, what can also help you to confirm what the simple moving averages are doing? It's the volume that TDIX is showing you. It's the volume. You got to look at the green cloud, at the red cloud, okay? Selling pressure, buying pressure. That gives you volume, okay? The more tighter Bollinger Bands, these blue Bollinger Bands get, okay? You know that there is pressure to the upside. You got to learn all these little things that the TDIX has to offer. The more you will see, okay, similar movements combined, okay, with the moving averages, how they turn bullish. TDI tells you the same, it starts telling you the same ways, okay, where it might be going, where you can take your a profit by seeing right away over here, okay. Let me change a color. That's a low time frame, 1 minute. Okay, you see that the TDIX, okay, the fast and slow moving average is starting to coming down. Okay, so you know that short short-term momentum is coming down because you see bearish divergence. Right? So you can quickly find also locations of where you could be taking quick profits. Keep in mind, I'm talking about right now scalping, not swings, scalping, in and out, in and out. Okay, Wild West trading. Okay, and you can take your profits really quickly if you see another move like that happening, or if it's a continuation. You can take that profit, whatever you made, 20-30%. You see that it's still bullish. You can quickly get into that trade back again with the 30% more that you already made, because TDIX is showing you that there is a tiny shark fin, and this continues. This is still bullish. You can multiply those profits, okay, in such a short time. It's ridiculous. Okay, this is just the movement just from 200 EMA, right? SMA. That's a 10% move, seeing that this is a nice continuation and then a quick drop. Okay, take it where you want it. That could have been your with 10x, okay, your 100% profit. Take it with 20, 30, whatever. You can really quickly, okay, accumulate and make quick profits in and out by simply looking at these simple moving averages where they cross. Okay, if it's below 200 EMA, you go for shorts. Okay, that's really up to you if you want to counter trade. But higher time frames, okay, higher time frames will always dictate, okay, will always dictate where this thing wants to go. You see, I took a trade from here, my first trade, okay? I took it from here. It was a little bit late, whatever. That was my original line, okay? It's a little bit more advanced, but some reversals have a specific angle, okay, that they will create, and many times you can draw that line ahead of time. And don't ask me how this happens, but it gets really close because on that specific angle, typically coin may bounce. It's never perfect, but you can always kind of eyeball, have a good understanding when something might happen. So this is a little bit more advanced, but I'm not gonna talk about that at all. And I thought that that's gonna be a great reversal. Okay, why? Because what I did, okay, I also confirmed this, okay, I also confirmed this with Fibonacci's, okay, simply from the bottom to the top, okay, that's the top right there, okay. Look how this was quickly front run. It did not even get to the 886. Look, I was expecting a retest. I mean, here, a bounce. This is why this label is still here. That's where I was expecting a bounce. It came down, okay? That's what market makers do. They get retail excited. This is a bounce. Boom, I got nothing to worry about. And then it's pumping. It will always retrace, guys. It will always come back. It needs to respect its levels. It needs to play out its its own ways of how these candles move. Like, it's sometimes crazy. If you don't understand it, don't follow it. I use Fibonacci's all the time because they simply respect these levels, and I can be confident that this is where any kind of a retracement will come. And you can do these retracements on low time frames. They are, for some reason, and I don't get it. I don't understand it. But even on 1 minute, 15 minutes, 10 seconds, okay, these levels get respected. And when you have it, okay, on your screen, these SMAs confidently looking at green or red, you know what to do. You know what to expect. You are looking at a key level where you will have a bounce. And then you simply break it down into the levels, mark some kind of and break the time frames much lower. You can mark some levels for alert, whatever that may be, and that's where you take it. Okay, you take this to lower time frames. You know that when you actually at that 886 or wherever that might be, you're simply minimizing your risk to such a levels that it's just crazy. Okay, it's just crazy. But it always needs to be, and almost every trade that you will take can be successful trade. I'm not joking. You see my results, okay? I don't even show everything. Okay? This happens all the time, everywhere. MMT, okay? Same thing here. What happened here? Okay. I also picked up on that one as well. Okay. Let me get rid of this. Okay. Fibs. Okay. Just simply as if I had nothing here. Okay. I'm looking for retracements, locations. Okay. Look, how can you go wrong with something like that? Okay. And I already had, okay, my fibs already before this move happened. I already had my fibs, okay, pulled out, and I was waiting for either this to come to 786 or 886. Okay. Now, if I take it down to lower levels, okay, look what happened. Okay, it bounced once, came back, and then took off. Okay, and if I'm gonna add the SMAs, look how well this got respected over here. I knew exactly what was gonna happen. Okay, that it will actually bounce. Okay, and I can come in just by looking at these SMAs, okay, with confidence. Okay, if I wanted to wait, I'm at 1 minute, but I would always break it down into seconds, and I will find that precise location, okay, where I need to come in. Hold on, I'm trying to go back to that level as much as I want to show you as much as detail as possible. Right, I'm at 15. Okay, and I think I took this from 15 seconds. Okay, where I was at these levels. The minute they started to cross, that was starting to be structural support around that level over here. Okay, because you also want to be looking at these little locations where things might be accumulating. Okay, this started to be a tiny accumulation. Okay, one touch, second touch, third touch, which you can call, you know, a triple drive, whatever. Okay, and then there was a bounce. Okay, so I already set, okay, a limit at that level, a tiny, okay, location. I know it's a really low time frames. You don't work on it. I work on these levels all the time, so it's easier for me. But that candle came down, it triggered the entry, and it took off. Okay. This is the beauty and the system, okay, call it the secret that I've been working with for a while now, and it works all the time. But you gotta know how volatile. Volatility could be your biggest enemy if you're gonna be rushing into some coins that did not finish its movement or they did not came to some specific key level. And because in most cases they want to go for liquidities. That's when they will retrace. That's when they will bounce. Okay, that's where they want to go. Okay, and you look for these levels, and then you start breaking everything down. Even if you start get rid of the simple moving averages and look at the 15 seconds with the 5, 3400 and 200. Okay, look what happens. The minute I see crossovers at these levels, especially when it comes to low time frames, they are just as powerful. And the minute where they cross, you see, I'm going crazy with this. I gotta find that level. Hold on. Oh my gosh. Where are we? Where are we? There we go. There we go. There we go. There we go. Look what happens. I'm on 10 seconds. I'm on 10 seconds. They are just as powerful. I don't want to be breaking this into 5, but this is where it will also that the 20, the yellow is 8, the 20 is green, right? Blue is 100 and red is 200. If I was to go down to 5 seconds, you would see in this location a crossover between the 8 and 20. Okay. And if you want to be more with confidence, okay, because you don't want to be rushing too quickly, okay, just wait until the 8, okay, sorry, the 5 EMA will go above the 34 and 100. Then you can confidently also enter that coin and see how it's respecting. Keep in mind, EMAs, okay, they act as support and resistance as well. So if you're gonna find that that special time frame where the coin is respecting that level at all times, you want to see that. You want to follow that. Okay, this is what will give you confidence, okay, for continuation, okay, or where you should be taking profits. And TDIX will show you those locations as well when they get respected many times around 200 and 100. But the higher the time frame, the more confident you will be because it's going to be a move, it's going to be a big move. But for this example, look what's happening here. I'm on 10 seconds, right? It respected 200 EMA one time. It respected the 200 EMA second time. It respected the 200 EMA third time. Okay, and then when you start to see your faster EMAs, which are 534, narrowing down, coming down, closer to the 200, you know that you are at the beginning of a reversal. It's losing its momentum, put it that way. It's losing its momentum. The closer they get to one another, you know that you're losing momentum, and that's your way to come out. Now you can take this as a short if you want and continue on going down with it. And look how far you would go with it. That could have been your crossovers. When you already have the 534, 100 below 200, okay? TDIX for every shark fin will give you an entry for short. And then money flow also tells you that because you're below. And I'm on 10 seconds, guys, 10 seconds. I don't know really what else to say. about this, how powerful this is. You turn and look, same thing here, okay? It just continues on respecting those specific levels. And you take these little guys, the more apart they are, the more confident you can be that this is a short lived bullish momentum that can make you from that point, okay, where it boom, that's what? Close to 4%. Depending on the leverage that you want to use, that could be a really nice profit. And that's just approach to scalping. And every shift, every move will be different. Keep that in mind. It's not like they're bullish all the time. But this became, look how bullish this coin was and still is. This will continue on moving, okay? There is a momentum in it. So if you find, okay, the one special time frame where one of these levels is highly respected, you can confidently be taking those trades for continuation. They will always hover around those levels for a bounce. And shark fins will show you that. You could have been taking a nice long from here. Okay, let's just another one. Okay. From here, because it's a support. Sometimes you might be too late. I mean, you just simply missed on the most ideal perfect entry. Just get on that coin for a continuation, as long as it's gonna be respecting that level. Okay, and you can either work with higher time frames, it's the same process, or lower time frames. Shark fins tell you that. Okay, they will show you exactly where you gotta come in, because that 200 EMA became a support, and 100 and the 34 and 5 are above. So you're confident that this is a bullish momentum. Okay, this is your confirmation that you're still in a strong uptrend. And look how many times it just continues on 1 minute to hover around the 200. Now, if you look at different time frames, you might have a 100 that is even more respected for nice shark fins as well. A bounce right there, a bounce, another bounce. And I'm already on a different time frame. Keep that in mind. Okay. Now, what's happening? Okay. I'm on 5 minutes. Okay. And it's the 20 EMA that works more like a support. Okay. And the farther apart they are overall, okay, long term, the higher the time frame, the stronger the confluence you have for a bullish momentum, or vice versa when everything is below 200, okay, for shorts. And that's how I find them. That's what I look for them, for really quick analysis. Okay. Okay, let's get into questions, guys. Okay, like additional, I mean, one last thing. Additional thing that I also use is the Brian's CVD. That also gives me a really good understanding when volume is coming in. That's a really great indicator as well. It also works really well on low time frames when money is coming in. This is also a fantastic indicator as well. And another one is also PVP, the periodic volume profile, which I also like to use on higher time frames. Okay, to find my point of control levels. That's another one. Okay. That's another one, which is great. And you see what's happening. That's where you have biggest volume. Okay. That's another one. That's also great and useful. I'm kind of adding on a little bit of different indicators to Easy Algo, what they offer. Okay. After I'm confident with some coin that I see a big potential, then I will just simply jump into, one or two or three different indicators outside of Easy Angle, right? To sometimes maybe even look for bullish and bearish order blocks, which some of you guys also seen as well. The more bullish order blocks I'm seeing, the more confident I am at the same time that this continues to be nothing else but buying pressure. That's also a really nice indicator where some of you, I'm sure you know this as well. Okay. So those are just additions. But okay, trend X, okay, pivots, okay, is fantastic way of breaking, okay, all of that lower time frames into seconds, okay, for your locations where you could be taking your trades. Daily, okay, narrow pivots, if you break everything down into seconds, everything that I was just explaining to you guys, okay, what I would typically do, okay, I don't need to see every single pivot. I would just simply place them myself, okay. That is typically the one where I believe might be bouncing off of to the upside, then I'll just simply mark the bottom pivot, okay. Remove overall, okay, these pivots, okay, and I want to see if they're going to be respected, okay, above these pivots. And then I will just simply look for a continuation, okay, with the SMAs. And look what happened here, where the crossover happened, right there. Let me zoom in, because I'm sure you guys don't see it. Like all that I'm showing you right now, guys, that's like micro analysis to a level that maybe you guys never seen. So when I
Mr. Curtis,
combine pivots with the SMAs, I know that this is my confirmation and this is actually respecting and bouncing. Okay, let's go back to, because I can go on and on and on and on with so many different approaches to this, but the 8, 20, 100, and 200 SMAs are crazy powerful. Oh, crazy powerful. Let's get to your questions.
Right. So
How's
before
that?
we get to the questions, could you please, I just want to get into the indicators because they are tools that we need for anything we want to use. Can I check the SMA 8, 20, 100 settings? I just want to snapshot them, please, and now can
There you
um
go.
let me just screenshot that, sorry, and everyone can do that as well if you guys want. Can we have the style again, please? Okie dokie. Let me just
This
check
is
that.
only 4 of them. This is only 4. You have a choice of as many as 10, but I
Yeah.
just picked 4. I don't need more than that. This is just too much. Okay.
And the other indicator that changed from blue to yellow or green to red, which one is don't which one does that? It's like the
Yes,
one
that's
that
the one.
changed from, oh, that's one that changed colors. Okay, okay. Right,
That's
cool.
right.
but
That's
what's
right.
it called? What's that one called?
That one is called it's the 7 EMA 5 MA by Storewise.
Okay.
Can you type them onto your, can you search for them on your bar so we can screenshot it? Or you know where you search for indicators rather than
Here, I'm
telling us the
gonna
name, so we can
here.
just screenshot it. Oh, you're gonna type it, okay. You see where it says indicator on the top there, indicators, where you look for the indicators. If you search for it, and then we can see a screenshot on it. Let me just do that. Just take a shot there.
Okay.
Nice. We got that one.
Yeah, that's the one.
Thank you very much. And also, I have a question with regards to the TDIX. I noticed my TDIX, I have all the other stuff there, but I don't have the vertical green and red bars. What?
The vertical green, that's just addition that overlaps. Somebody was asking me about that some time ago. This is just simply buying and selling pressure levels. It acts like a RSI. Here, I'll take you to it. Okay, that's the script. Okay, that's the name of it right there. But you got to play, you have to practically eliminate every single feature in this indicator and just simply leave the vertical lines. Okay, and
Mhm.
then you just simply have to add that indicator on top of TDIX. And that's when you start seeing bullish or bearish momentum, right? Money are coming in. Like what's nice about this, depending on which time frame you might be on, okay, you see that there is already money coming in, buying pressure coming in, right? It's already light green, but the minute it gets dark green, that's where many times you will see, some bigger bag trying to buy this at the time, right? And some are selling it, some are buying, selling. So when you're gonna combine with the locations where you are, so on and so forth, this also helps me, okay, to understand that there's actually buying pressure coming. And if I'm gonna combine all at the same time, okay, the CVD, okay, also confirms that for me as well, which is consistent, okay, buying right now. This was a complete sell. It's easy to read, okay, green, red, okay, moving averages, they're easy to recognize, okay? And when you're working at the volatile conditions, SMAs, okay, simple moving averages are less responsive, okay, at crazy volatile coins. And that's what makes them so bulletproof, where you can actually safely enter some coin where it's about to die. Now, when there is a huge expansion between those moving averages, you know that it's really risky to take that trade. You want to wait until all of them will narrow down, where they will be close to each other, when they will be starting slowly to narrow down with one another. And that goes for EMA and just as well for SMAs. Same approach. Same approach. And all of that, okay, all these moving averages, I mainly use for scalps for my entries. This is how I get into my entries. Indicator X, trend X, those are my indicators that I use to find liquidity levels and pivots. Okay, and this indicator, but by trading toolkit, that's also a really quick fix on where I will be able to find bullish and bearish divergences. That's what I'm mainly expecting from this indicator, to show me clear bullish and bearish divergences at key levels. Key
Right.
levels.
So how
Okay,
do you
like
get
you
those
see,
green and red ones there, like the greens and red areas
all
where you
these,
expect the
all these,
liquidity?
all these are inside the indicator, all of the trading toolkit. Okay,
Yeah, the
you,
settings for that. Yeah, let's have a
yeah,
screenshot on that one as well.
yeah, you just simply add the bullish, bearish, okay, all these four onto the chart, and everything just comes up.
Can you go to the
I
inputs?
Yeah,
I just missed that.
I kept everything as is, right? I didn't change the 30 or 70 because sometimes I will play with a 20 or 80, right? But that's just simply too much. It just spreads everything too far apart. So I just simply stayed with the default. And it gives me fantastic locations for especially on 5 minutes and 15 minutes for bullish or bearish divergences.
Right.
Easy to
Good.
see, easy to spot. Sometimes TDIX won't show you that, okay, but this indicator will. And this indicator is also fantastic on low time frames. This is why I like it so much because it's simple, easy, clean, and it gives me and it shows me what I want to see. And many times this indicator, okay, I also simply look at as a price action, my levels, okay, as these shark fins call it, go up and down, okay. If I see a peak, okay, at some really crazy overbought coin, I'm starting
Mhm.
to see another, pump, but the RSI, okay, is much lower. I know that that momentum is shifting. It's
Yeah.
shifting, right?
Mhm.
It's
Lower
still
low.
pumping, but it's shifting. And that gives me confidence, okay, that I know that that crazy momentum is about to die. Okay, it's about to die. It's still bullish. Bots are pumping this, liquidations are pumping this. Who knows? Who cares, right? I'm just waiting for the most ideal momentum or location where it's about to die. Okay, that's how I take on my reversals, especially when it's crazy volatile. And you need
The
to the
last one
most.
before Rocky, I think Rocky wants to ask a question as well, and other people.
What's
But
that?
last one I want to ask is that when you look earlier, it's like you're talking to me. The other day I had a good entry with AIA, but I noticed and I took a lot of profit already, like almost everything, and the coin ended up doing like 1,000%. I was there on all of it, but when you mentioned that you you hold it like it could be frozen or something, then that was almost talking to me because I took a lot of profit before they get to the way I got to, even from the middle of it. And so it wasn't great in that aspect. And the last thing is that you mentioned Orion terminals, but also you mentioned accumulation, because how do you find those coins that are on accumulation in places before the actual move happen? How do
when
you go find
when
them
uh,
like
when
there, like that region? Yeah.
yeah, when the EMAs are tight, when they are narrow, when they are close to each other on lower time frames. This is
Right.
five
Okay.
minute, right? Okay, but if you get to lower time frames, okay, you will start to see. If I was to go back to that level, you see what's happening here. Perfect, right there.
Yeah. Yeah.
Perfect example, right?
Do you have
The
a place
coming
to go
down,
find them like
coming.
Orion terminals, or do you just go through your list to
I
find
just
them?
go
That's what I was
no, I
referring
go
to.
through Orient terminal and sometimes my exchange just as I talked about it. But if
Mhm.
it's a consistent downfall, okay, and I know and I see that it's really tight, candles are not really doing much, they're not really shifting. So everything is being slowly sold. I know that I shouldn't be touching it until I start seeing, okay, the other EMAs turning bullish above the 200. And then the more they expand on lower time frames from the 200, the more confident I am that this is going to be a nice, good move, okay, for a while until it gets to some level. And look at that. That's a over 300% move. If I was
Easy,
to
yeah.
watch this from just just from this just from this level here, right? Just from here. That's it. If I was to take this just like that, without any leverage, without anything, just spot. Just take this spot, right?
Yeah.
300%. 300%. Right? Where it might go, that's where pivots will come into play. And I typically, when that happens,
Right.
I'm looking for resistance. The gray areas, that's resistance. Here. Okay. Look how you can take this on from a completely different perspective. No candles, no nothing. This is how I also spend some time understanding this. How I can actually make sense out of moving averages. What makes them so different, and how I can use this to my advantage. How I can understand it. And I'm not looking at, listen, I'm not looking at any candles. Right? I'm not looking, and this is, keep in mind, 1 minute shift. Okay, 1 minute shift, right? Like I showed you here, this could have been, okay, close to 300, right? Move from this
Mhm.
moment on, from here, that could have been 70% move. From this moment, the minute they all cross over, that could have been another 100% move, right? This, the minute they cross over, okay, on 1 minute, that could have been another 73% move.
Yeah.
Guys, I'm on 1 minute.
Yeah. This was a
So
crazy move, this AI area. It was a
yes,
definitely
so
unusual
just
stuff.
just just imagine if you were to get this coin at these levels here, at these levels.
Got them for 1.235. That's where I got it from.
Yeah.
It was crazy.
Just imagine, okay? 1 minute, I spent a lot of times back in the days, okay, testing different things, different indicators. With the moving averages, that's something recent, and it's been crazy successful. But
Thank you,
keep in
man.
mind,
Thank you.
yeah, like this is to me, it's all like 5 minutes. It's also amazing. Okay, it's also great. But most of my trades and most of my time I spend, just 1 minute and into seconds to find those ideal places, right? For entries. That's what I do. That's where I
Um,
sit constantly.
s-
Any other questions?
yeah,
Okay.
one question before Rocky, sorry, bro. Is which one the EMA's 53400? Which one is prioritized? Like you use the SMAs for any for confirmation or okay, yeah.
SMAs, I look for sniper, I look at them for sniper entries. Those are my second, okay? SMAs, I look at in seconds time frame. That's where I mainly use them. Look at them at volatile locations. But the 200, the yellow, at the same time, it's also a fantastic confirmation that I know what's happening. So it's more like a preference, okay, how you like to take this on. But the SMAs are mainly for my sniper entries, mainly. Okay, that give me that precision entry, okay, where things could be reversing when they start to cross over and turn green, right? And that will be right there, depends on what you want to do with it and the time frame that you're working with, right? So, and the condition, how that coin is reacting, what it's doing, if it's choppy, if it's, this or that, that will also affect your style of trading. Keep that in mind that these right now are fantastic examples because this is a coin, okay? that is well respecting these moving averages. And those are the kind of coins you want to look for. You want to look for that, you know, that if this is bullish, right? You want to know that you're going, like, you know, for that coin where it's gonna turn, okay, the 200 SMA at the specific level, a time frame, which is right now 5 minutes, and take the profits the minute it starts to start hitting some kind of a resistance. That's your profit done. 184% in here. Okay. Did one touch, second touch, that's double top, boom, and then it just dumped. It just retraced, and then it started to continue again. So whichever EMAs you choose to work with, you have to test the coin, okay, on what time frame they are being respected the most. In this example, it looks like that this coin, okay, respected, okay, these averages, these moving averages really well on 5 minutes. On 5 minutes, okay? Those are short movements, short shifts, okay? And then when you're gonna combine these locations with, you know, indicator X, okay? You start to see liquidity pools that give you good understanding of where you might expect a bounce if it's gonna if it's turning bullish, okay? Trend X, same, right? If you're gonna look at it, you have to from time to time flip-flop between these indicators so that you can build a story behind it. Okay, when you know what it wants to do, where it's been, if there's actually a volume involved in those movements, that could be a fake volume, that could be just choppiness. Different time frames, okay, will respect different ideas. But the higher the time frame, okay, the better it is to look for reversals. And that's what I do. I do reversals. That's what I'm confident with. That's my, you know, that's what I like to do. Reversals. I
That's your
come in from
edge.
that's my edge. Exactly. That's my edge. I like to come from the beginning of some move and get in at some point where it's about to end. And those are the two locations. I give you like a whole perspective on how you can use this for reversals, for continuations. Now, it's for you to choose how you want to use this system that can, you know, be combined with different ideas. Okay, so the more you understand about every indicator with easy algo, okay, that gives you, this is your roadmap, indicator X, trend X, okay, as simple as it can be. That's your roadmap, okay, that's your that's your GPS. Okay, and then you have TDIX, okay, that confirms all these entries and exits with the shark fins. If you just simply focus on the biggest spikes, look what you can do. This could have been a short, right? Boom, another one. That could have been a short. This is just 5 minutes. That could have been a nice spike, short. That's it. That's it. And you can just simply stay on 5 minutes. You don't have to go into seconds like I do if you're not that comfortable, right? And at the same time, look at the volume. TDIX has a lot to offer. Okay, like the volume that it shows, you know that it's constantly bearish. Okay, So you just go for shorts. These are like many times what I also do, I'm looking at the charts, candles, moving averages and stuff like that, right? But when I'm breaking things up into real, micro details, I just want to see one specific indicator and see what it's doing. Honest to God, I want to zoom in. I want to see the detail. I want to micro analyze this. Okay. You guys don't understand. Like I really go into details. I really go into details when I know I'm at some specific key level. Okay.
That's
And
great.
that's how I get them. They don't happen just because I'm lucky. No. What you guys are
So,
getting,
Can I
right?
ask you, Mr. Cruz?
Yeah.
I just tried to look up that indicator that changes colors, the MAs, and maybe I wrote it down wrong or something, but you said 7 EMA underscore 5 EMA, it's not showing up on TradingView.
Right there. Store wise. You see it?
I got it. Okay, let me try it again. Thank you.
Yeah. And look
Yeah,
how
got it.
simple. Yeah. Got it? Great. So
Got it.
look
Thank
how,
you.
yeah, look how simple it is to look at this. Look how simple it is. Like this is all what I'm giving you is, it's all about mainly entries, sniper entries. Another thing that you should also always keep in mind, working with such a low time frames, okay, getting stopped out, don't worry about it. It's nothing. It's nothing. Okay. Because you are at such a low time frames. Okay, that keep that in mind. That stop loss you can make up in no time. Whatever you got the stopped out with, you can make that up. It make that difference up in like just snap your fingers if you're gonna be playing with this a bit more. Okay. What I like to do at this because look, because I'm on such a low time frames, okay? This can be a market buy for me. This is moving. I can quickly set my stop loss. And if it's gonna come back, boom, I'm out. Okay. I haven't lost anything. I haven't lost anything because I'm on such a low time frames. If I'm working with higher time frames, okay, keep in mind that one candle, let's say from here to here, okay, that's a freaking 4%, okay, 4% candle. 1 minute, that's 4%. I'm liquidated if I'm going with a high leverage on this. I'm done. I don't have enough room, okay, for my stop loss. Okay. I just don't. But if I go from seconds time frames, look, okay, look, that one candle, this candle, for example, that was a 10% pump, right? And look, I could have safely entered that the minute it crossed over the 100 SMA with the 8 and 20. And it broke through the 200 as well. So every time frame, it's critical to understand that movement, right? I'm trying to find that location. Now I'm on 10 seconds. Look at that precise crossover where all three turn, all three. Look, I'm on 10 seconds. And many times honest to God, I quickly flip-flop between the 5, 10, 15 seconds. 5, 10, 15 seconds. Just to see their crossovers. Because if it's really volatile, it's crazy important for me to know how these moving averages are forming. So if I was to get in from that point, and that's 10 seconds, guys, 10 seconds, candle, okay? With 10x, that's 100% in 10 seconds.
So may I ask, like, do you have your exchange hooked to TradingView for you know, insane fast entries and exit, or it's
I
just you
no,
do it?
I look at my charts and I execute my trades on my phone. That's the quickest way of for
Oh
me
yeah, you
to
are right. You are right. Yeah.
What I do
I'm
as well. That's what I do.
I'm looking at the screen, okay, and I have my phone in front of me in my hands, okay, and then just boom, market buy, and if it pumps like crazy, then boom, I can quickly come out 100% easy, boom. If I came in with 20, 30, 50. So in my, like these type of moves, I can confidently, okay, with back testing all of this and playing with this for so long, go in with 30, 40, 50%, okay, leverage. That's insane. But I see where I can take that move to such a precision. It's ridiculous with these moving averages, simple moving averages. No other indicator before could show me this. Let me put it this way. Or these crazy buy and sell, buy and sell, buy and sell icons that come up and they just drive me crazy. But looking
Which one
at
is the one that changes colors?
what's that?
The moving averages that changes colors. Which one is that?
That's simple moving averages by stocks in box. Okay, and you just simply change the colors with the 80, 20, 100, and 200, right? They just simply flip-flop the minute candles go above these moving averages. That's when they change colors. That's what really happens, right? So the higher the moving average, the more confident you will have that this could be a beginning of a reversal, right? Any other questions? That's
I-
just the cherry on top of everything that I added to what Easy Algo offers. And Easy Algo indicators, guys, they're just amazing. Learn as much as you can about them because every single indicator has its own powerful feature. If you cannot understand these indicators, you haven't spent enough time to know them. That's it.
Right, yes.
And learn how to read them between different time frames.
I have two more
Okay.
questions there, Chris, if it's possible.
Yeah, go on.
The first one is, did you change any settings on Brian's CVD's indicator?
No, I kept it as it came. The only difference I did is just the panel label here, paint right there. I don't
Mhm.
need to see. I don't need to see that. Okay, I don't. That's it. And that's a great indicator as well. It gives you a really good, precise location on lower time frames. Like this way of trading, that's my personal strategy for seconds, mainly seconds, being at really low time frames.
Great, great, great.
Okay,
It's really great.
that's
And
that's that's the only thing since I've been trading gives me enough confidence where I can take these trades.
okay, thank
Okay.
you. And the second question is about your market entries and exits. I use Maxi a lot, and what happens a lot of the times is that there's a big gap between the market exit price and the value. Do you have that on Blowfin as well?
Which, because you were breaking up a bit.
Oh, I'm sorry about that. I said I trade a lot on Maxi, and there's a lot of the times there's a gap between my market exit and the value of price. So what it means is like
Yes.
it says like
Okay.
$300, and then I exit and it's only $80 or something like that.
Yes. Yes. So I know what you're saying now. So when it comes to these type of conditions, those are crazy volatile conditions when you have the market price between the exchange price.
Yeah,
So
exactly.
yes, so when you are in those type of conditions, you always want to wait until the market and exchange price evens out. It's equal.
Okay.
If it's crazy volatile, don't even think about it. Okay, all that just think of it like it's a fire that someone is constantly adding more fuel to it, more fuel to it. When it burns up, it comes down. Someone is adding more fluid and more gasoline on it, so on and so forth. Okay, stay away
Okay.
until both prices will start to calm down. The market will not be choppy. Okay, that's what you want to really stay away from. Wait at some, typically that happens at some crazy overbought location, right? Where it's crazy bullish. You got to watch that as well, because that's how you can get stopped out really easy, especially when you're gonna set your stop loss. Boom, that market price will stop you out like that.
Yeah.
Stay away until everything is going to calm down, relax. Possibly when, in most cases, when these type of moves happen, it's a pump to the upside, crazy pump. Then it just dumps. I also look for those, okay? They dump, right? And that's fine. Let them dump. But at least it found its bottom, and then from the higher high to the new lower low that was created,
Uh,
you can throw your Fibonacci levels and retrace to the location where it will eventually come back to. It might take some time, but many times, okay, it's gonna be that 786 or 886, especially when it was a really crazy, volatile or crazy bullish coin for a couple of days. There's been
okay.
so much money getting into that coin for no good reason. Okay, it will continue on being bullish until it's gotta make that first lower low, retrace, and that's the first sign of your confirmation for reversal, and then it slowly starts to die and bleed. But you will
Okay.
have to wait for the first break of structure, first lower low, one of those things. So this is why price action also plays a big role in how you're gonna be taking on these trades,
Yes.
right?
Thank you very much.
When you use the Fibonacci, do you use the linear or the log scale Fibonacci?
Linear.
Yeah. Okay. Cool. Cool. Lovely. And also that SMA you saw, the SMA is 82 something. I couldn't see. You saw the input, but you couldn't see the style on the second snapshot here.
I thought you guys, okay, right there. You guys would have see it.
Just get that
The
one.
yeah, the
I think I'm talking about the other one, like not this one.
not this
There's
one.
another EMA you show earlier, different one in the
That's
settings.
the 5, 3400, and 200.
Is that the one that you say changes colors as well? Like,
No,
what's the style look like?
these are solid colors, the ones that do change between the bullish and bearish. That's the SMAs, simple moving averages.
Can I have a look at the settings for that one, please?
Hmm.
I like the
These are all on the videos, right?
8,
It's gonna be on the video if you watch it later. Just go to the
20, 100,
settings.
and 200.
This time,
Okay.
sorry. Style.
Style. Yeah, those are
Yes.
just changed
Just the
colors.
colors. Yeah, yeah. Okay, okay.
That's it. As simple as it is, right? Nothing really to it.
So, how do you
Hello,
use
Chris.
yeah, sorry.
Hello.
How do you use the CVD? Uh,
Okay.
First, I couldn't find the CVD by Brian, but if
It should be there. It should be there. Like this is the name, like you have it here. Okay. Brian's CBD with EMA fill. It's
okay, okay.
okay. Any other question?
Hi. Yes, please. Please, can you talk a little bit about how you place your stop losses once you get
Stop
into the trade?
losses?
Yeah.
That really depends on the volatility and my
Okay.
leverage, which I depending on how risky some coin might be. Then obviously I will wait for a crazy pump like Jelly had over here. I also made a. Let me go back because I had an entry on that. I think maybe guys I showed you or not. I had an entry over here for a short. I also grabbed it right at the peak. You see what's happening here. You see, one minute when there's some coin that's pumping, right? 1 minute is a really nice a giveaway for a crazy bullish coin, okay? For me to see when these four, especially the three SMAs, 8, 2, and 100, are far apart, far away from the 200, right? On a 1 minute. There's one thing I think maybe not enough people are, well, not much. I don't follow much of what's happening on the market. You guys, Easy Algo is my only home. I'm not involved in any other communities. I don't go to any events. I don't do any of that stuff at all. Uh, there's I think not enough being said about the low time frames. Okay, maybe there are some guys scalpers that you guys follow and you love them and what they do and how they do. I honestly don't know. But playing with lower time frames, it's a slightly different approach. Okay, I see a lot more when I'm actually on a lower time frame. In my opinion, there is no any other way to scalp. How can you scalp on the 5 minute or 15 minute? I just don't get it. People see that this is just crazy too much. I mean, the only way of seeing what's happening for scalpers is to actually be on lower time frames. So in this example for jelly, when I'm looking at some coin that's highly volatile, right? The more apart, the farther apart, okay, these other okay the moving averages are apart from the 200. I don't want to be even, patching. It's still nicely respecting the 100. It's acting as support. 1, 2, 3, 4, 5. Okay. But what I'm also seeing is, as an example, right? Like these moves, these pumps are, kind of weakening. They're not so strong. They're small. That's a big pump here. That's a move. That's a lot of money coming in, so on and so forth. So what I want is when that's happening, like all these moves, depending on what the time frame you're looking at, keep in mind every candle will reflect that time frame. How big they are, okay? If there's a lot of wicks or if there's a lot of solid candles constantly happening, you know that this thing is in a constant bullish momentum. And you can use that momentum to your advantage when you're actually gonna combine this, okay, with some specific key level, where in this case, it could be hitting some type of a resistance. But because this coin had been so bullish, pumped by who knows freaking what, it bypassed every resistance. And how could I have known this without these EMAs? Look, how could I see anything, right? If I didn't have this stuff. First time you're looking at pivots, right? Oh my gosh, that's the first resistance. Resistance, I have them marked in and supports in gray. That's how I use, as you guys know, that you can customize your pivots the way you want. So I have them in gray without anything here. Okay, some people will think, oh my gosh, it respected that one pivot here, then it respected another one here. Possibly this is going to be a real resistance. Who knows? But it's not. It continues on going, and then it continues on breaking another one, and it continues breaking another one. Then it's a retest, and it just continues on going again. It's like you already lost your whole freaking account. You by that time you're done. But if I'm gonna put my SMAs combining with that, I know that this is crazy bullish. Look how far apart the moving averages are away from the 200. This continues to be a bullish momentum, crazy bullish, right? So if you're not confident with that, you don't need to rush into any of it, okay? Just disregard the pivots, okay? Until you start seeing some crossovers. The higher the time frame, the safer it will be for you. That's it. As simple as it can be explained, okay? So if you stick to nothing higher than than 1 minute, you will be able to find that safe location for you to enter when you will already see a nice crossover at some peak of the 8, 20, and 100. And then when it gets and you start seeing that it's a consistent right now, that's a 20 and that's an 8 below the 100 here, and all of these two get below the 100, and all of the sudden the yellow, the 200 gets broken. That could be your safe entry right there. But you need to understand the volatility and its movement. They can show you, they can almost predict where you should be getting in. The lower the time frame, the better you will see everything. Okay. Where was I now? Where did it go? Anyways, yeah. If I change the times, then everything just go nuts on me. I don't know how to change that. I forgot. So the lower the time frame, the more precisely you can actually find that location where it's gonna reverse. But then I just simply flip-flop between the 1 minute, 15, 10, 10, and 5 seconds when I'm looking for that ideal locations where things might just die off. Okay, that's what I do. That's how I look for them. That's how I see them every single day. And you have these every day. Every day. There's gonna be always 1 or 2 coins a week, if not even sometimes a day, that will be giving you these type of movements. And momentum is what you can take to your advantage to be more comfortable, if you like, with the continuation. And these moving averages will also show you those locations as well. Any other questions?
I mean, bro, it's been amazing, man. Like the time you're taking and everything you're giving us is such a helpful things. Yeah, and I was,
Play
like I
with
said, I
it.
was gonna ask a question, but you answered it because I was gonna ask you, how do you find entry if they're like in a price discovery? But you mentioned your EMA, so I think that's probably what you do.
Look, for price discovery, there's one coin. that we just had, truth. All right, truth. This thing is still pumping. Let's take this as a live trade, and it's still live, right? So that's when I would just simply get into Fibonacci, okay, retracements for discovery. And I have multiple different settings for these, okay, for regular, so on and so forth, okay. And that would be, okay, regular levels of 1618, 2618, okay. And typically lately, I've been seeing a lot of coins bypassing these levels, which is extreme. Those are extreme levels that they've been reaching. Okay, so these would be my locations for it, right? Where I would be trying to. It's more like a guessing game, okay? Because that's what it's really comes down to. But I'm trying to find a location, right? Because no any other indicator but the Fibonacci will actually tell me that, unless, I don't know. I don't use any, I'm sure that there are crazy indicators out there that only few people have that will tell you everything, right? But this is, for example, on the 15-minute, right? This is still, look how much volume there's still in it. Okay, this coin still it has a crazy bullish power in it. Okay, and it just doesn't want to stop. Okay, so typically, if you want to look for something, you still see on 5-minute. What I like to do many times, okay, is simply use trend lines that just simply give me some type of a visual, perspective on things. Okay. And you can see them, and you can take these approaches in different ways, right? Different time frames will show you slightly different story. You got to keep that in mind. So if I was to look at this, if I actually starting to have any bearish movements, okay, look, I see already on a 12-minute bearish divergence. Okay, this already shows me that it's losing momentum, this coin, right? This could be even right now a reversal in the making. That could be the last. Pump right now. Okay, how I know this? Because the candles are so tight. Look how tiny they are. There's not much volume to it anymore. Okay, not much at all. This could actually be the end of it. Now we are talking about it. This could be the end of it. Okay, and my RSI shows this as well. Look at it, like here. Okay, this is if I stretch this farther out. Okay, I have, look, new lower high. Okay, lower high, and it's gonna be dying slowly now. Okay, and the minute it might be forming some kind of a specific pattern, and that to me looks like a rising wedge, it will break down soon. It will break down soon. It's just a question of, okay, timing right now. But the movements right now are so small. I mean, slow, right? Look, I got a shark fin on 1 minute. And that's a typically good sign. One. Why? Because on the
Look at it on
1
the 15
minute,
minutes, bro, and the 1 hour. See how it looks like to you.
yeah. And if I look at volume, that also tells me. And you see, when you start to break things down to lower time frames, sometimes it's difficult to see one indicator that shows too much. So I want to see, I would just zoom in, and I want to see that volume, right? And the volume is coming down drastically right now. See it? It's coming down. There's not much volume. It evens out. Okay. And the Bollinger Bands, the outside, okay, are getting narrow. So that's a good sign. Playing with this enough to see how your favorite indicators look like, how they react at different time frames, and especially at some crazy overbought volatile times. It's good to understand that. It's good to know that. It's good to know that because you'll see this over and over and over and over again. Okay, don't be stuck at some idea that this is what I want to be doing and this is one thing I want to be looking for. If you want to do that, that's great. That's fine, right? But it doesn't mean that this is the only way. Okay, play with it. Spend time. Be flexible. It doesn't have to be. Things don't have to be exactly by the book because this is crypto. It's volatile. It changes in split seconds. Okay.
The 15 minutes, it looks slightly different, the actual chart, in terms of shorting it, swarms. Oh, it's swarm, it's not swarms. It's two different coins.
You see, the CBD is also turning bearish, right? So now there is selling pressure coming into this coin. But if market makers don't want to dump this, they'll just simply kind of be chopping you up. They will think that they will try to make you believe that this is still an uptrend, but this is just fake money pushing this and liquidating, you know, all the shorts, right? They're still pushing this. Like this is a little bit choppy. Like the way I'm looking at this right now, from my perspective, on such a low time frames, those are big candles, dumps, pumps, okay, pumps, dumps, okay. That's where you can tell that you have bots involved in this pump, okay. This is not retail doing this. This is being controlled really well right now. Looking at these candles, okay. This is not a healthy move. Let me put it this way. And if I'm seeing something like that, I know there's gonna be a nice dump. Okay,
Nice.
there's gonna be a nice dump. Still being pushed, a lot of volume. That's great. But that time is coming. Okay. So if you're gonna get on your SMAs, you see how bullish it is? I'm on 15 seconds. Right? It's still bullish, continues on being shifted, okay? Being moved up, okay? So knowing this, okay, especially if I'm gonna go on 1 minute, right? Like I told you guys before, look how crazy bullish this is on 1 minute. But I believe that this is the end of it, okay, right now. Okay, that time is coming. 15 seconds, that's typically my kind of, you know, safe place that I want to see if it's still above, below, right? It's one of those things, right? And if it's still respecting the 100, which is the closest to the 200, that's always going to be your 100, your 100, right? It's respecting it, as you can see right there. Okay, it respected the 100 here, respected it, wanted to dump, but it then just came back, respected it again. It's respecting the 100 again. So these little clues, you see, look how many times it's all being everywhere respected. You watch this more than enough times, and you will see this everywhere. You will see this everywhere. Okay. There's not much of any support. The structure is so choppy, it just doesn't make any sense at all, right? This doesn't have anything that you can actually make a clear understanding of what it wants to do. So when you have things like that, okay, you know that you better wait until things are gonna kind of start to make sense, that you will start to see some specific pattern that you understand. If you don't understand it, simply don't touch it. Simply don't touch it. Okay. But all that time, look what it takes. You know, many people would think, oh, this is the time to short now. Oh no, this is the time. If it's above the 200, it's above. It's that simple. Wait until it dies. Okay, wait until it dies, and then it might just dump. And what might happen? What might happen? Okay, this is your next support level right there. Right, major support. But what could happen, because you got another, okay, liquidity pool sitting in this location, okay, it might go for a bounce here, let's say, okay, and then, okay, come up, and you can take this from your fib retracements. Okay, and that's how you can grab it when it's gonna die, and eventually it will. And then you can grab it once again from these levels, somewhere in here. Sometimes it might even be the 618, but this should be actually 382. It's the same way, but for bearish what do you call it? Bounce, okay, it's gonna be a 382. A bearish retracement. It's gonna be the 382. So all these little ounces, all these little things at these type of peak levels, they play a big role in when you should be taking that entry. Okay, this will be always slowly, in my opinion, just for a little bit longer, continue on going up. I might even look at it where to take a trade from this, but that trend is about to end soon, guys. I can tell you that much. So you can even look at it if you want to take a trade. I will. Any other questions?
We're struggling to find this Brian indicator on TradingView. I went onto the search where you search for the indicator. I couldn't see it. You know, like the Brian EMA, SMAs. We couldn't. If you go search for it now, you wouldn't find it unless if I don't know what happened to this to mine. Like there, I couldn't find it there.
See it right there.
Yeah, it's weird. It doesn't. I think they probably take it out or something.
It's possible.
Yeah. Well, lucky you guys, you have it on. Just search for it again.
Is,
Uh,
is this an open source?
Should be, yes.
Yeah. If we couldn't find it, well, if we can later ask if it's not too much for for a code, just
I
we just put it from
I
the
have the code.
Pine script. Yeah, I'm sorry, but it's difficult to find.
yeah, but
Yeah, I can send
Thank you,
that
man.
in.
Yeah,
Yeah,
not a big deal.
no problem, no problem. So you see another thing that I can tell you, anything that you want to be taking, any kind of a trade, whatever that may be, when you look at the TDIX, make sure you always gonna be taking that off of some shark fin. Always. When you have these pressure points. Okay, don't take anything that's in the middle. Always take any kind of a trade at the lowest or the highest levels. This is anything that's in the middle, right? These levels, stay away from anything. These are not your entry levels at all when it comes to TDIX. Okay, stay away from those levels. Only shark fins you pick up, whichever whichever time frame you choose to trade off of, make sure that you only take those trades where you actually have shark fins. And that should be your rule for every single trade that you take on. That's another thing as well. What I've been showing you is just mainly like scalping, but when you're gonna combine with the TDIX, you will also find a good confluence for better decisions. If that trade actually makes sense or if it doesn't, right? So that's another thing. TDIX is a powerful indicator. Keep work with it a lot, and you will quickly understand how you should be taking your entries, because the crossovers on TDIX, okay, of the small and fast MAs, that's where you could also be taking entries, and every time frame is different. Keep that in mind. Don't be confused between different time frames. That's where I think many traders get confused. Keep track of what you are actually looking at on a higher time frame when you're actually gonna compare this to lower time frames. And you can label these locations with some kind of vertical lines. However, this is for you to also create your own way of analyzing these trades and creating some kind of a footprint of how you can actually be consistent with specific location between different time frames. Okay. Anything else?
Thank you, man. Thank you so much. I really appreciate it, man. It was a great session. Learn a lot. And also the recording, I'll make sure I'll send it to you or and Morgie so you can upload it for the rest of the community to have access to it.
Yeah, no problem. See what's happening. That could be even right now the last of it. That could be the last of it. Okay.
Thank you, brother.
Okay.
Thanks a lot, Chris.
Yeah,
Lots of
no
love.
problem.
Really
Okay.
good. Thank you, guys. Thank you for being patient with him as well. So it was a good session for everyone. So we call it. I don't know what time you guys are in
Well,
your own time
thank
zone, but we are night here, so we have 12 o'clock in the evening
yeah.
or in the morning.
Play with these, spend time as much as you can, and try to understand everything between different time frames. Okay.
Mhm.
And I'm sure you guys will be just fine. It's just a question of being confident with something that you can trust, right? That's what it typically comes down to. You got to trust the indicator that you're working with. You got to trust the time frames that you're comfortable with, right? All these small things typically create good results. Okay, it's all into details. It's all into details and your comfort zone. If you don't have that comfort zone, then you will struggle with understanding many things. So keep it simple. I change a lot of things just so that I can keep things simple, and I kind of moved into moving averages, which surprised me a lot. And it hasn't been that long since I've been trading in this method. Okay.
Yeah, man. Thank you. Good advice.
Okay. Yeah.
Thank
We'll
you.
be in touch.
Thank you,
I'm
man.
still in the
Appreciate
channel,
that.
guys.
Thanks,
Thank
Take
you,
man.
care.
guys. Thank you.